Amazon is part of the Magnificent Seven. However, it's been pretty much out of the spotlight this year. Nevertheless, the stock continues to move higher. It recently crossed and closed above a key resistance level. I do have a target at roughly 160. Now, Jim Cramer sat down with the CEO of Amazon, Andy Jassy. They talk about the value of their Prime membership program and the importance of Amazon Web Services in the current economy. Jassy highlights the potential of Gen AI to transform customer experiences and the importance of investing in each layer of the Gen AI stack, including compute, middleware, and software applications. Jassy also discusses the challenges the company faces in determining which experiences to target first and which layer to operate at. Overall, he's bullish about the future of AWS and Gen AI as well. Let's listen to this video.
Video from Thursday Night Football to Lord of the Rings to Reacher, which I know you watched, Jack Ryan, Terminal List, Citadel, a great selection of exclusive video content. And you get the channels from our third-party media partners like Max and Paramount Plus and Discovery Plus and BET and NBA League Pass. And then you get over 100 million free, ad-free, and free songs as part of the Prime Music benefit. You get grocery shipping benefits, you get Prime Photos, you get a subscription to Grubhub, which is a $9.99 value a month. So it's an incredible amount of value that Prime members get for $14.99 a month, and it's part of why they shop across Amazon in the broad way they do.
All right, well, my child says he uses in Amazon. I'm listening to that. I'm thinking, well, why not charge double? We'll all pay it.
Well, and I appreciate that, Jim. I think that we add benefits to Prime all the time, and we have for many years, and we're always trying to give customers the best possible deal. And from time to time, we will raise the price as we keep adding more value, just to make sure that we can afford a sustainable program. But we're trying to make it as high value as we can, and customers love it.
All right, well, I like the special events that you have, and I'm thinking my fabulous colleague Carl Quintanilla, he's doing a program for tonight, 10 o'clock in Nashville, and you guys have just done a big thing in Nashville, and you're including making a nice auditorium. Could we see something like a Taylor Swift concert on Amazon, where if we're members of Prime, we get it?
We have done a number of live concerts as part of our a combination of Prime Music and Prime Video. I don't know if you watched the Black Friday football game, which was the first Black Friday football game ever. You did, and you watched.
Well, I shopped on Amazon. That's what we did. We didn't go to the store, although the Jets.
It was not the most competitive game, but actually, if you watch the production, I thought it was pretty fun. And one of the things that happened was we had a Garth Brooks concert that he did live in Nashville, which was available to our Prime members. So it's actually, because Black Friday was free to everybody, other people were able to watch it as well. But we do a number of concerts like that. There's all sorts of special events we do for Prime members.
Okay, let's talk about some of the things that you're doing with Amazon Web Services. Now, one of the reasons why the trust has a big position is this is just a phenomenally profitable thing. I met you a few years ago, and all you talked about was how you kept cutting prices, because you want everybody, and because you also wanted good deals. Last year, the rate of growth slowed, but then we got a bounce. Is that bounce continuing?
Well, I think that if you look at the growth rates of AWS, per Q3, the last results were released, you saw that the year-over-year growth rate started to stabilize, 12% year-over-year. And I think that while there's still some cost optimization going on from companies concerned about the economy, it's largely attenuated. It's not nearly at the same rate as before. And I think we made a decision in the beginning of the pandemic, right, wrong, or indifferent. We think it was the right decision, but it was different from other companies. That instead of, even though we knew it might be a difficult economy, instead of trying to squeeze every last dollar from our customers, which a lot of our competitors did, we would try and side on this, with customers, and we would try and help them weather the pandemic and the uncertain economy. And we knew that in the short term, it might lead to lower revenue growth, but if we do right by customers over a long period of time, we're trying to build a business that lasts all of us. We believe it'll help customers, and the business will ride along with it. So, I think we made the right decision for customers. I think they're really appreciative. We see them, we feel really good about the deal growth that we've seen in the last few months. And I continue to be very bullish about AWS come 2024 and beyond. I think that the business today is a $92 billion annual revenue run rate business. 90% of the global IT spend is still on premises.
Right.
If you believe that that's going to flip in the next 10 to 20 years, which I do, if we continue to have the best functionality by a large bit than we do, if you continue to have the largest partner ecosystem, which we do, the strongest operational performance and security as we do, and the customer orientation we do, I think we have a lot of growth in front of us. Not to mention what's happening in generative AI, which I think is going to transform virtually every customer experience. That's another huge opportunity for AWS business.
In the conference call, Andy, you did say, I'm going to quote you, tens of billions of dollars in revenue over the next several years? How's that possible?
Well, if you think about virtually every customer experience that you know, if you think about all of those being changed and evolved and reinvented with generative AI in the middle of it, I mean, the global IT spend is a really, really large number. It's trillions of dollars. So, I think that in my opinion, almost all the generative AI, especially because all those efforts are effectively starting now, are going to be in the cloud. There isn't going to be this 90% of generative AI spend on premises. And so I think that there's going to be a huge number of, every company is going to reinvent their core customer experiences that way.
I talk to a lot of companies, and I'm not sure they even know what they're doing. They're in it. They say they have an AI strategy, but I mean, I know you must help a lot of companies, but aren't there a lot of companies that are just doing it for show?
I think almost every company now, either they themselves as a leadership team or their board knows that this is really transformational, what's happening with generative AI. And so everybody knows that they have to change their experiences. Now, I think a lot of companies are still in the stage of trying to figure out at what layer in the stack they want to operate at in that generative AI stack. And there's 3 main layers, and they're trying to figure out where. And then they're trying to figure out which experiences should they go after first, and what are they actually going to change about it. And a lot of what we do, because most of the conversation in generative AI has been at that top layer of the stack, which is really the application layer. But all 3 layers are giant, and we're investing in all 3 of them in a very substantial way. That lower level is really the compute to train the models and run the predictions or inferences. The key there are chips, and we've been building our own custom AI chips now for several years. At the same time,
you were the first to go Grace Hopper. You were the first to go high-end NVIDIA.
We have a deep partnership with NVIDIA. All of their new chips have always come out on EC2 or AWS EC2 instances first. And at the same time, we're also building our own chips. We have something called Trainium for training and Inferentia for inference for people that want to push the envelope on price performance. And so that bottom layer, you have a lot of companies will build those large language models on those chips. And then that middle layer is really where companies that don't want to invest all the people and the dollars in building their own models, they want to take an existing large language model, customize it with their own data, and then be able to run it as a managed service. And that's why we built this service called Bedrock, which takes not only our own models, which we call Titan, but leading third-party models like Anthropic and Stability and Llama 2 and Cohere lets them take those models, customize it, not leak their data back into the general models, and then have the same security and access control and features they have in AWS that they can use in that service. So all 3 layers of that stack really matter. Companies are trying to figure out when they're going to build versus when they're going to leverage another model.
Well,
we're helping them do it.
It's not chimerical. It's definitely for real, and that's what matters. That's Andy Jassy, President and CEO of Amazon. Don't miss the final part of my interview. We got some fireworks during tomorrow's show. Mad Money's back into the break.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.